What's up, wonderful people? Welcome back to yet another episode of the Zero to Market Engineer series. Unfortunately, no face cam for today. I'm just going to be diving into the concepts that you need to know to be profitable. I'm not going to be teaching them in this video. I'm simply going to give you an overview of what you need to become profitable. What I believe are the key foundational concepts, not including psychology and risk management, but the stuff that you would use as technical analysis, the concepts that you would actually look for on the charts. So let's hop into the first one. I'm just going to be going over my ICT for Dummies book. I haven't looked at it in a while, so I honestly don't even remember what I put in here. I'll just fill in the blanks on whatever I'm still using, or anything that I left behind and the stuff that I'm still using now. So just to start off, let's hop into the first thing, which is going to be macros and kill zones, which both of those have one theme in common, and that theme is time. So here are macros. What is a macro? Macro are time-based concepts on the lower time frame that you use. There are also higher time frame macros that are involved in quarterly theory, which I believe I also go over somewhere here. Okay, I don't go over quarterly theory, but that is something that I use. Macros are a time-based concept. Kill zones are also time-based concepts. One of the most important things that you will learn is time, because in order to trade properly, you're going to have to trade at the proper times. That is also including news events. You want to be trading on days with red folder news on Forex Factory. That's another thing that you're going to need to know. Macros are lower time frame confluences that you can use to actually enter trades. You can use to give yourself confirmation, or that last confirmation before entering a trade. If it's during a macro, you see that liquidity sweep, you're getting into a high probability trade. So time and price, as I mentioned, one of the most important things is time, because even if you have your model, if it's in between a session, it's not likely to play out until the session actually starts. So this is one thing that you'll learn with experience. It's one thing that I also learned with experience. It was that even though my model was there, sometimes I'd be eager to enter because I see my model and I enter, and it literally does not move until another hour or two, until that session actually starts, and then it actually runs to the target. And in that hour or two, you tend to lose your trades. You tend to actually lose profit. And the market does that on purpose most of the time. It does that so it can accumulate a bunch of liquidity before it actually moves. It cooks up your stop losses, and then it runs when the session starts. So be patient, wait for that time. And that's what kill zones are. Kill zones are the specific hour or two inside of a session that you are optimally looking to take an entry inside of. So we have ICT Asia kill zone. Asia's the kill zone that I love trading. Then we have the London kill zone, New York kill zone, and London close, which is the same thing as silver bullet. There's also the PM session of New York, which I do trade, and it's not included in here. And then each of the sessions has their own characteristic. That's something that you can learn on your own. But the first thing that we covered was time. So let's actually write that down over here. Everything you need to know to succeed as a day trader. The first thing on our list is time. And let's make this a little bit bigger. So time is our first most important foundational concept that you are going to need to know. And inside of time, there are various different concepts like kill zones, probably the most important, sessions, macros. I could put quarterly theory on there. I'll just put QT. So that's going to be the first one. Time. Let's move into the second one, which is daily bias. So power of three is something that is probably the most game-changing concept that I learned in order to actually be able to identify the daily bias, figure out where the daily candle is going to go. Daily bias consists of these three stages, which is power of three, right? There's three different stages. There's accumulation, manipulation, and then the distribution, the expansion. I like to call it better than distribution. I think expansion is a better word for that, because essentially it just expands in the right direction. Distribution is more of after manipulation, it just distributes towards whatever. I don't even know. Expansion sounds like a better word. That's the word I've always used it. Accumulation, manipulation, and then the expansion of the daily candle. So once I began to understand that the market operates in these 3 stages, I then began to like dive in a little deeper and actually try to figure out how I can capitalize on this 3rd stage, which is the expansion. And one of those things that I also used was that model, right? The entry model. Another thing for daily bias is making sure that you use the daily candle. So once you learn power of 3, a lot of people, they like to scale down inside of the daily range, and then they try looking for that lower time frame accumulation, lower time frame manipulation, and distribution. When in reality, all you need to do to find daily bias is figure out where the daily time frame is going, not what's happening on the lower time frame inside of the day, but rather where the daily time frame is going. So that's right here. So the next most important and foundational thing that you're going to need to learn is to find daily bias. And in order to do that, you learn power of 3. You learn about the different stages of power of 3, and then you use daily time frame. Biggest mistake that people use is that they try to use the lower time frame to figure out where the daily candle is going. That's not how it works. You stay on the daily time frame and you find where the daily time frame is going to go. Okay, let's move on. In order to actually get into those entry models and stuff, there's another thing, weekly range, which is another thing that I use often, and this is kind of like characteristics of specific weeks. And in order to figure out where the weekly range is going, it's the same thing. It's kind of like daily bias. In order to figure out where the 4-hour candle is going, you're going to look at the 4-hour time frame. But actually, I'm wrong there. In order to find out where the 4-hour time frame is going, you use the daily bias that you have. And in order to find out where the daily is going, you figure out where the weekly is going, right? The higher the time frame, the more the significance. So that's another thing that you're going to need to know, which is time frames. Higher TF means that it's greater, it's more significant, it's always going to move towards the higher time frame narrative. So the highest time frame is moving the market. If there's something on the monthly time frame, then that's what you're going to be looking for. Like I use seasonal tendencies all the time. If you've already been following me and you see how I trade in my Telegram community, you'd see that I use the monthly seasonal tendencies all the time. I use it to check where the monthly candle is going. Then I see something out of the ordinary, and I like to call this out of place. I think I have to make a separate video on that because it's a very complex topic, and it comes with a lot of experience. Knowing when price is out of place, and when it's out of place, that's the highest probability entries. But yeah, time frames is one of the most important things. Knowing how they work, knowing how to trade each of the time frames. You can see I only have the generic ones. I also don't hop lower than the 1 minute time frame because I'm more of a higher time frame trader. I like to hold my positions for a longer period of time, and I only really ever use the 1 minute time frame to confirm my entries, get into a more precise position with a tighter stop loss. Otherwise, I'm using the higher time frame narrative, monthly, weekly, daily, to actually find my trade. And if it doesn't exist on the daily, I don't scale down and try to find a trade. I simply don't trade. And another thing that I do is I only trade one pair, which is gold. And in your trading career, maybe you'll like a few different pairs, but I personally recommend you stick to one, because even when the markets close and I close my eyes, I can picture where gold is at. I know where it's at. I know all my setups that I took. I can basically scroll back through price and literally identify every trade that I took. That's the kind of mastery that you should have over your pair. If you're trading a lot of pairs, it's going to be much harder for you to actually do that, and you're not going to have complete mastery. And I don't believe in such a thing as you use a different pair to find a trade that day. You find a pair and you trade it during that same time zone, you're going to find the same session during that same kill zone, then you're going to find a trade every single day that's a high probability day on that pair. So I don't believe in such a thing as trading multiple pairs. Other than trading NQ and ES, because you have the SMT divergence, or Euro USD and GBP USD, SMT divergence in that one as well. But versus trading Euro USD, GBP USD, and gold and NASDAQ, I don't like that. I say you choose one and you stick to it for the rest of your career. I've only ever traded gold. You've seen my results with gold, and I literally only trade gold. And everything that I teach on gold applies to every pair. Like, you can personally go and find all this stuff. This is the generic like understanding of how price works. So now in terms of the actual concepts, basically time frames. You can dive deeper into weekly profile if that's something that interests you, if you're more of a swing trader like myself. Premium and discount, that's just another concept that you can use to figure out when you're selling, when you're buying, what's a high probability sell, what's a low probability buy, or low probability sell. This is the power of 3: accumulation, manipulation, distribution. 90-minute cycle. So I do actually include quarterly theory. That's another time-based concept. And here we finally begin to dive into fair value gaps. We begin to dive into the technical side of things. And what you're going to need to know to succeed as a day trader are fair value gaps. You're going to need to know IFEGs, inversion fair value gaps. You're going to need to know liquidity. You're going to need to know, I'd say these are the most foundational ones to actually understand price. There are things like order blocks. I honestly don't even use order blocks. I don't like even looking at them, if I'm going to be honest. I feel like I've simplified my trading to understanding like inversion fair value gaps and fair value gaps so much that I don't even use order blocks anymore. So I'd say these 3 are your most key foundational technical concepts that you need to know to succeed as a day trader, and you have to learn how to apply these with different time frames inside of the daily range to find the daily bias and during the right times. If you can do that, these are the only concepts that you need to know, and those are the only concepts that you'll see me using. Like, literally, if I go to my Telegram community and just scroll through and show you guys my trades, it's only ever for value gaps. Like, look at what I have marked out. Some highs. Another thing would be immediate rebalance. That's actually a really important one that I use. Immediate rebalance. That's a really good and advanced concept that you would have to learn after you learn both of these, or all 3 of these. But if we scroll through my trades, it's going to be only for value gaps and IFEGs. Like this one right here, IFEG, right? It's a bearish for value gap, closed up above it, came back into it. And then I'm using liquidity and candles with no wicks as my targets. We could keep scrolling up and keep finding the same exact stuff. Here's another liquidity low and a fair value gap, right? I'm only ever looking at fair value gaps, then using them on different time frames, and that's more than enough that you need to succeed as a day trader. Okay, here's fair value gaps, and end of story. Like, moral of the story is that that's literally all that I use on the technical side. Like, when I started off, I was looking at everything. I had like ICT's model basically locked down, the 2022 model, order blocks, everything else. But fair value gaps and IFEGs, they stuck with me because those are actually the way that the market works. And in order to further understand them, you have to master time frames, because there's going to be different fair value gaps on different time frames. And like I said, this is kind of a video of me breaking down everything you need to know to become profitable. I'm not actually showing you how it works. So that's on you to actually figure out. And let's keep going. So there's a lot. And this book is public in my Discord page. So if you want to read it, give it a good look. Like, these are more technical concepts that I look at. Like, I define my Asia session model that I actually use for entries as a Asia breaker, like a Asia session breaker block, where it's a higher high, it sweeps the low, and as it's moving up, I use an IFEG to get into a trade, like this. And here's my entry, and then my target is like the high right here. So that's my model, and I use the like breaker block to define it. However, I never actually take the trade from the breaker block. It's more of just like understanding how price works, where it's a lower low, higher high, and it uses the high there. But I feel like it's too similar to support and resistance, and therefore I don't actually use the breaker block for entries. Order block, as I mentioned, like, it's something that I did use. I just no longer do it anymore, because I realized, like, the simpler I make it, the more successful I actually was, and that's it. So I do have an Instagram page. This is no longer the username. It's Full Send Traders, and then I do have a Telegram, which is going to be linked in the captions. There's also my mentorship group. But I feel like this is kind of like a breakdown of everything that you need to know, minus the psychology, the risk management, and anything else that is external from technical analysis. But in terms of technical analysis, all you really need to know is trading at the proper time, understanding the daily bias, and you use fair value gaps on the daily time frame to figure out where the daily bias, like the daily candle, is going, and then you use the same fair value gaps, the same IFEGs on the weekly time frame to figure out where the daily candle, like the week is going, basically the weekly profile, which helps you find the daily bias. That's what I'm trying to say. You can do the same thing on the monthly time frame. You can use seasonal tendencies. And then in terms of the concepts, fair value gap, IFEG, liquidity, and immediate rebalance. I feel like that's kind of summarizing everything that I personally use, and it has helped me become successful in the most simple way possible. You don't need to overcomplicate it. I learned over time as I become more and more experienced, like my trading has become so simple and easy to explain. Like genuinely, anybody can learn my model. This doesn't mean that they'll be profitable because, like I said, psychology, risk management, that's a big part, which comes with time, and you're going to have to spend enough time with this stuff to actually master the other stuff. But this right here is in itself enough. Take a screenshot of that, put it on your chart right here, and look at that. Make sure you're studying all of these concepts right here. They will make you a profitable day trader. So going forward in episode 4, 5, 6, and on, I will be breaking down each of these. But this video covers everything that you need to know to succeed as a day trader. So I hope you guys learned something. I'll catch you in the next video. Peace out.